I'm gonna tell you two indicator strategies which have a very impressive probability of putting some gains in your pocket. Especially if you are a day trader, then this video is perfect for you. You can use these strategies either for crypto or stocks. At present, I'm going for Bitcoin chart. The first strategy which I'm going to use is Ichimoku Cloud. This strategy is used for positional trading, means the results are seen in days or sometimes it may take weeks. If you like to go for a short term period like 5-minute charts or 15-minute charts, then no need to worry, because the second strategy is just all about that. First, the first thing, go here and search Ichimoku Cloud. Now here I have already put it in my favorites, so double click it, and here it seems too complicated, but we can make it very simple by just going for its setting. Go for style, and we just need leading span A and leading span B. The rest can be unticked. Baseline can be removed, lagging span can also be removed. The rest can be used, and in inputs you can put lagging span to 1. That's all. And here we got our strategy, and you can see there are two lines here. The first is green line and then other is red line. There's a simple thing which you need to learn here is that whenever this green line crosses up the red line, the uptrend starts. For example, here at this point, green line crossed the red line, so the Bitcoin price started to rise. Similarly, whenever the green line crosses down the red line, the downtrend starts. Here's a small downtrend, but take a look here. When the green line crossed this point, there's a big fall. We can see it's a big, and it continued to this point, and at this point we can see the green line crosses up the red line and a huge uptrend, and then again another fall. We can see that the green line was still up, but it happened opposite thing. So I'm telling you that even the best strategies have some problems, so you can never get a strategy which is 100% correct. But in most of the tradings, like 95% of your trades with this strategy will be in profit, and only 5% may lead to a small loss. So what you can do is put your stop loss about 10% down of what you have invested. If you want to play a little safe, then you can go for 5% down. So it's not going to be a big deal, because you can see here are big trends too. Like here it crossed this point and then it started to rise. So there is only simple thing which you need to know is buy when the green line crosses the red line, and this continue to rise. And when the green line is about to cross the red line, or you see that it has happened already, then you can just immediately sell, because you don't know, there may be a big fall even. So most of times you're gonna get a benefit with it. But there is one thing, as I have already told, this strategy is only for long term. Now long term doesn't mean that gonna take you years. It is gonna take you 1 day or 2 days, and sometimes it might take you 3-4 days. But the result would surely be good. For example, we can see here the price was 20,622, and we almost sell at this point. So the price here is 22,516. That is a huge rally. And if you grab such rallies 2-3 times in a week, you would easily get 10 to 20% return. That's very much fine for a day trader. Now our second strategy is MACD strategy. Well, the MACD is commonly used by most of the traders because it is one of the best strategy. I'm not gonna use MACD alone. Well, I'm going to use a combination of MACD and 100 EMA. First, let's talk about what MACD is. First of all, we are going to do short term trading, so let's change our time frame to 5 minutes. Now we are gonna search for MACD strategy. Here it is. So I'm gonna click it and we got it. This is a histogram with 2 lines. Now if we take a look, there are 2 lines. The first one is blue and the second one is red. The blue one is called MACD line and the red one is called signal line. Now whenever the MACD line crosses the signal line, it shows an uptrend. For example, as parallel to MACD, we can see our chart, and at this point the MACD started to rise, and at this point the chart also started to rise. So it keep on doing this until the MACD line just crosses down the red line and we see a downtrend. That's how it happens. And these histogram lines of green and red color shows us the trend. Like green color shows the uptrend and the red color shows the downtrend. These dark green candle shows that the trend is rising up, and these light green color candle shows that the trend is falling down. Similar is the case with these red candles. Well, it's very simple, as we talked in the last strategy, that we need to buy when the MACD crosses up the red line. We bought here and this carry on to this point, and at this point we sell. We bought at this point and sold at this point. Even if it is small, but that's a benefit. We are not going to use only MACD. The first reason is that the MACD is quite volatile and shows a very small trend. Even sometimes the trend is in the overall trend of the market is in down. Sometimes the overall trend of the market is in the down form. Like here, it is continuously falling, even it is giving some up points, but here we can see that this MACD line is crossing and falling and crossing, and but no trader wants to buy against the trend of the chart. So in this case, we are going to use another indicator, that is 100 EMA. So I have already put it in my list, so I'm gonna click it. That is EMA 50/100. So I clicked it, and so first I'm going to remove the 50 EMA. I'm gonna untick it and leave this one. I'm gonna change the color to white because I prefer that, and increase the opacity to 100. Now we are done with our setups. We are gonna make the chart size large, and whenever these candles are down this 100 EMA line, for example these candles are down at this point and here it crossed, so at this point, this whole point, it's a downtrend. And in case if the candles are up the 100 EMA line, then it shows an uptrend. Example is here, it crosses and keep on doing it like that, and here it again fall. So that's how we need to use this 100 EMA. Now we can do two types of trade. The first one is long and the second one is short. So if you are going to do a small trades in like for a minute or for a few seconds also, then this strategy is perfect for you. The first thing you need to know is that you need to see is that the MACD crosses up the signal line, and whenever it crosses, then you need to see that whether the candles are up 100 EMA line or not. So we can see at this point our conditions are eligible, so we bought for long. Now it carry on going, and at this point our MACD line just crossed the signal line, so we sold at this point. It's so simple. so it carry on to fall, and again we bought, and this is how it happens. Now the case is how to do the short one, how to do the short position. So here the MACD line just crosses down the signal line, and similarly the chart candles also crosses down the 100 EMA line. So we put our short position here, and the MACD is still down, carry on to like this point. So at this point we reached, at this point from here we reached here, so our short have gained us a lot, so we can sell at this point. There are a lot of positions which you can put in this small chart even, so if you trade for weeks, so you can get a lot of benefit. I hope this video was helpful. If so, then like this video and give this channel a subscribe. Help me to reach to 200 subs, and I'll help you to learn trading on my channel. See you till next time.